Welcome to How to Restaurant, a series I created leveraging my many years leading operations for emerging restaurant brands. If you're a current owner or operator, or if you're thinking about becoming one, you really need to know this stuff. We're going to start with the basics. P&Ls, profit and loss statements. And I'm specifically talking about restaurant constructed P&Ls. These are different, not all P&Ls are the same. But this is basically your scorecard. And this is where you start to make decisions to track how you're doing and to also decide where you need to pivot or improve. The first part of a P&L, a restaurant specific P&L, is going to be the net sales or our revenue, which represents 100%. That number starts with gross sales. So all the money I bring in, less taxes, tips, discounts, and then that gives me my net sales. The first expense against my revenue is going to be prime cost. We're going to be spending a lot of time on prime cost, but for now, I need you to understand that typically there are exceptions, but somewhere between 55 to 60% of your revenue should go towards prime cost. There are two parts to that. The first part is cost of goods sold, which should be somewhere around 25 to 30%, once again, depending on your operation. But that represents food, paper goods, non alcoholic beverages, and alcohol. Basically, anything that directly goes into serving the guest. The second part of that is my labor cost. And once again, the number can vary depending on the type of operation that you're running, but somewhere between 25 to 30%. And that includes my hourly wages, salaries, my taxes, employment taxes, and workers' comp. These two together, once again, make up my prime cost. Next would be my operating cost. This is everything else that goes into running my operation or my restaurant. That should be somewhere between 20 to 25% of my net revenue. And that's going to have all my different fees. But the most important one that I want to talk about is your rent. Your rent should be traditionally somewhere between 6 to 8%. Now, there are many exceptions to that. As an example, if I'm renting a very expensive place, but with the anticipation of very high volume, or I already have very high volume, I can pay a little bit more in rent, but I'm putting more dollars in the bank. The last piece of this is why I'm working so hard, which is net profit. And on average, a net profit in our sector should be somewhere between 15 to 20%, but there are exceptions to that rule. Net profit is also referred to as EBITDA, which is the accounting term, which is earnings before interest, taxes, depreciation, amortization. You don't have to worry about that right now. But the main exception here is volume, which means that if I'm running a very high volume location, bringing in a lot of money, but my percentage profit is lower, remember one thing, you put dollars in the bank and not percentages in the bank. So next, let's take a look at an actual profit and loss statement. And this is kind of the layout you should be looking at. And you're going to start, of course, with your net revenue. And from that, you're going to look at your cost of goods sold. So all the cost that goes into delivering the product to the guest. And then you're going to look at your labor, all the labor it takes to run the restaurant. And those numbers combined, like we said, should be below 60%. And in this case, it is. And then we look at the rest of our expenses. And in this example, my rent is pretty low. I got a good deal on it. And at the end of the day, I'm net profiting somewhere around the 20% mark, which, if I was actually doing these numbers, I'm a happy camper and I'm looking to open more restaurants. I really hope you've enjoyed this video and even found it helpful. My plan is to release a new video diving deeper into the restaurant operations once a week. So please shoot me any comments or questions. Until next time.